Yo, what's good? Hey, I appreciate everybody for tuning in. Hope y'all had a happy holiday time with your family, whatever you want to call it, whether you celebrate it or not. Hey, I'm Marcus. You're the channel, The Debt Free Dad. Y'all already know what it is. We talking finances, financial takes, financial topics, attorney reactions, and whatever else that I just want to talk about, or y'all hit me up and y'all want me to talk about. Now, before we even get started into the topic, I know this is probably too late. I probably should have did a video earlier today just to talk about the beware of Black Friday. I already went online and I still see people out there participating in the foolishness, which completely shocks me because I'm like, y'all don't have Amazon or like use the internet or your phone, but it's still people out there wrestling over cheap ass TVs and old ladies getting ran over with shopping carts. Hey, we got to stop it. I did Black Friday once. This was in my younger days when I went to the military, and like some guy got ran over with a shopping cart, and I mean, like ladies were wrestling over stereo speakers. It was just an utter mess. So I vowed from that day in probably 2004, 5. I was like, I'm never doing this. You know what again? So I respectfully decline to participate in the madness. But hey, if y'all out there participating in the madness, I hope y'all got your helmet on and y'all head on the swivel because there's no hold bars out there. Now, today's video is going to be an interesting video. It's going to be fun. We're going to talk a little bit about can you recession proof your finance? I know y'all probably seen a lot of the fear mongering and stuff going on. I don't know. I think I call it fear mongering finance, where everybody's like, oh, it's a recession. The stock market is going to crash. Everything is going to crash. Like, may or may not be true. But in this video, we're going to talk about what can you do? What steps can you take to recession proof your finance? So even though everything may be going crazy around you, you are going to be okay. You can have yourself in a position to win. Hey, this is a special Friday because, hey, it's the day after Thanksgiving. And I was lucky enough to have a guest on this show. This guest is very high speed. She's really good with the finances. She knows a lot about real estate investing as well. And so, hey, anytime I can get someone on the show who has subject matter expert in a certain area, y'all know that's definitely what I want to do because I like to be educated. I act like I know everything, but I don't know. Trust me, I don't know a lot. I just don't let people know what I don't know. I keep it to myself until I figure it out. So without further ado, I want to introduce my homegirl, Aquania Escarnet. Hey, I'm going to introduce her. Y'all make sure y'all show her some love. I actually got her YouTube and everything tagged in the bio. I'm going to put more things associated with her brand, and what she does in the description. So y'all definitely make sure y'all check it out. Let's go ahead and invite the guest in for today's show. What's going on, sis? How are you doing today?
I'm good. Thank you so much for having me today. I'm so excited to be on your show.
Hey, I'm grateful to have you on. I already know how it is. Like, the day after Thanksgiving is rough. I went to the gym and I lasted about 30 minutes and I was like, I can't do this. I'm leaving. so I already know that it get rough out there, but I definitely appreciate you blessing the community, blessing the channel with your presence and your wisdom.
Thank
So,
you.
hey, before we go in, why don't you go ahead and introduce yourself? Give us all your great credentials and accolades, and tell everybody where they can find you at on all your platforms before we dive in.
Yes, absolutely. Hi, my name is Aquania Escarne. I'm the creator of The Purpose of Money, a platform that helps women build generational wealth through life insurance and real estate. Welcome, welcome. I have a website, thepurposeofmoney.com, where you can look at my blog, listen to my podcast, and check out the latest tips that I have on building wealth and creating a legacy. I also can be found on Instagram at The Purpose of Money, where I share free wealth building tips, strategies, go live on most Tuesdays, and love to engage with my fellow followers. So check me out on Instagram, check out thepurposeofmoney.com, and let's go.
Hey, that's what's up. Hey, that's high speed. Like I said, somebody on the show who definitely know what they talk about. I'm probably going. While I got you on, I'm gonna just keep it a buck. I'm probably going to scratch some real estate questions with you too.
Okay.
But, just I'm gonna have my personal realtor on, but that's an interesting relationship because I'm an asshole. Pardon my language as a real estate client. I gave her grief. I was like, and like that's my wife, homegirl. They went to graduate school together, and I was like, like when I was buying my first home years ago, because I didn't know a lot, I really deferred a lot to, the agent and everything, which was great. And that agent, I liked her because she was just like me as an attorney. She was aggressive, and I like those type of people. This time, now I know so much where I'm a detriment and I'm probably going to get on your nerves. Yeah, yeah. So before we dive in, I always like to ask the guests, tell the community a little bit about your background. Everybody comes from a different financial background. Everybody has a different financial journey. Hell, everybody has a different financial goal. So tell us a little bit about finances when you were growing up in your household and what things may have influenced you to have such a great financial mindset at such a young age. I'm jealous.
Oh, well, I have to thank my parents, first and foremost. They were my examples of what to do and what not to do. My mom was a full time entrepreneur most of my career, so I got to see firsthand how hard entrepreneurship could be. But I still gained a lot of experience and expertise from her in knowing, like what it takes to run a business, a determination, a consistency, and then also the importance of hiring a team. My mom didn't hire a team, but when I started my business and I had the courage to do so, I did hire a team so I could scale and grow, So my mom taught me a lot, even if it was through her mistakes.
Right,
My
right.
dad, on the other hand, they both my parents were in the military, but my mom did not retire from the military like my father did. But what my father was able to accomplish as someone in the army for 22 years who didn't make that much money in the army was a very significant real estate portfolio, and he did a lot of investing and then knew to pass on that knowledge and enthusiasm to me. So when I was 16, my dad gave me a copy of Rich Dad Poor Dad and was like, read it. He's not a man of very many words. So when he says something, you do it. And I was, like a money nerd, even at 16. So I read it, loved it. Robert Kiyosaki outlines in that book, for those that don't know, like different paths that you can take financially. And he had a rich dad and then he had a poor dad. And poor being, employee, not of the ownership mindset, not investing in real estate, not knowing what to do with his money. And then the rich dad who had all of those things. So I read that book and was inspired immediately to get my first job as a summer cashier in a retail store and to leverage that first check to open up a Roth IRA. So I
Wow.
was I wasn't playing. I wasn't
Yeah.
here to work and buy sneakers or clothes. And most people in the clothing store was like, "You're not going to use your check to buy clothes?" And I'm like, "Maybe, but not my first paycheck." So that's how my investing journey started, because I had read that book and I just knew that I could invest in a Roth individual retirement account and start saving for retirement. And that book actually convinced me to not want to work forever. And that was well before I'd ever heard the word FIRE or financial independence and retiring early. I was just like, who wants to work forever? I want to travel. I want to see the world, and I want to use my money to make money, period.
Hey, that's a dope. At 16, I can remember. Okay, I don't know if I ever told the story, but my first job was at Checkers, and that job I got fired from abruptly because why does Checkers have sugar? And why would you have sugar by the French fries? So I inadvertently put sugar on the French fries, and they should have gave me a raise because people came back and was like, "Hey, y'all got any more of those sweet fries?" And I was like, "What the hell are they talking about?" So at 16, I was like, "Why y'all got sugar? Y'all Checkers, and why is it even by the French fries?" I don't know. I think that was them problem more than a me problem. Label it. Come on. But 16, I definitely wasn't thinking about that. So that's dope that you had that influence. And as being a veteran, another thing that I will tell you, I noticed that it's very common for people in the military to have really decent real estate portfolios because they'll buy a place and then they'll move after 4 years, 6 years, 8 years if they extend the stay there, and then they'll hold on to it. Is in close proximity to a base, Most times it's probably in close proximity to a college. So I have seen my time in with people who in the military, you don't make that much money in comparison to the outside, when you're out in the
Mhm.
public sector. I remember I was actually looking at, I don't know if you all do this, it's actually smart to do. Go to socialsecurity.gov and take a look at your benefits, and they'll show your income that you made every year from the time you started working to current. And I remember I was looking at it with my son, and he was like, "What happened in 2001 to 2005? Were you homeless?" I was like, "Nah, I was in the military."
Not homeless
He was
though.
like, what happened? He was like, it was a big significant drop. What happened right there? I was like, I was in the military. But I have noticed that a lot of military personnel have really nice investment portfolios because
Mhm.
they purchase, stay there 5 to 7 years, that equity grow, they move. So that's definitely a plus. Salute to your pops
Mhm.
and salute to him for passing that on to you, your whole family passing that on to you
Mhm.
very early on.
Mhm.
So, but before we dive into recession proof, okay, I want to go and talk about this, and I'm gonna send you this video so we can chop it up and you can put it on whatever. But I want to talk real quick and talk about the Black Friday shopping, the pre-Christmas sale, the post-Christmas sales, the New Year's sale, the day after the New Year's sale. Okay, like, t- t- tell me your thoughts on on that entire concept of sales, and what advice would you give someone if they are actually thinking about making a purchase? Because I'm not gonna lie, I almost got caught up. I literally was watching TV and I saw a commercial pop up, and I think I got a 65-inch TV down there, and it was like 70-inch TV, 300 and something dollars, and I was like, man, that's a good deal. It took me a minute to realize, wait a minute, I can't see all of that shit look the same. So what are your thoughts on those end of the year sales and how they try to gas people to come out? What advice would you give someone during this time of year to just how to maneuver?
Yeah, that's a really good question. I hope you don't get mad at my answer, but my immediate response is you should have made a list in July. The reason I say that is because when you have a list, even this is same applies to going to the grocery store, right? Hungry people should never go grocery shopping. Why? Because they will go up and down the aisle and pick up a lot of food that they never intended to buy because they were hungry. The same applies to someone who's shopping during Black Friday, Christmas sales, New Year sales. But when you have a list and you go to the grocery store, you are more likely to stick to your list and you are
Right.
only going to buy what you need, not what you want. So I actually, this is the type of shopper I am. All the sales emails were coming through well before Black Friday because now it's a thing apparently to
Right.
start advertising Black Friday in like October. So Costco sent their book, Amazon sent their book, all the toys kids should ask for Christmas. And I gave it to my kids and I looked through it myself and I circled the things that I wanted or thought I wanted. And then I planned to do some research to figure out who really was offering the best deal. Because
Right.
just because Costco got to me via mail doesn't mean Costco has the best deal. And you know what ended up happening? I bought none of those things I circled. I didn't actually need any of them, and I promptly forgot about them about a week or two after looking at it. So, what did I buy on Black Friday? Nothing.
Right.
That is how it kind of works
Right.
when you're really clear on what you need. And so the second tip I have is if you do need to make a purchase, whether it's large or small, I try to say if it's over $100, then give yourself 24 to 48 hours to think about it. If you're
Mm,
like me who completely forgets about it in 48 hours, then you really don't need it. You save yourself money and you never make that investment. But if you're still itching for it in 48 hours and you need it and it's a good deal, then go ahead and buy it.
right.
But you
Right.
can plan for those big purchases when you make a list.
Right. I definitely agree. Having a plan, even if you don't follow through with it all the way, you'll be better in a better position
Mhm.
than if you didn't have anything at all.
Yes, that
I
is
mean,
true.
just having a plan has probably been the biggest thing to contribute to my debt-free payoff and my first generation millionaire journey because I don't hold to it all the time, but I'm making so much progress because at least I'm consistently doing something that gets me close to what one of those goals is on the list. It's funny because, and I don't know how old your children are. My daughter's 11 and my son is about to turn 16, and like I guess I'm kind of happy because they're at the stage where they don't want shit. I'm like, what y'all want? Money. I'm like, okay, that's easy for me. Okay, peel you off something. I need to put it in the card. I'm just throwing it at him. Like, right, hit him in his face with it. And my daughter kind of the same way. She kind of passed that whole Barbie and stage. So it's awkward because I don't like that they're growing up, but it's a little bit relaxing. As far as buying stuff, my general rule is if you didn't think about buying it until you saw a commercial, you don't need it. If the first time it crossed your mind when you was up watching TV late night and you saw a commercial or you saw something pop up on your social media feed, it's probably not something that you want. So that's the simplest way that I could put it.
I like that. In fact, that's traditionally true in most cases.
Right,
And my sons are 11 or 12. I'm sorry, my son just turned 12 and I'm still getting used to saying it. My son is 12 and my youngest is 9, and they're pretty laissez-faire when it comes to gifts. Like my oldest really just wants PlayStation gift cards to play PlayStation.
right,
And my youngest is a special needs child who really doesn't have the ability to tell me what he wants. So we get him what we want. So it's perfect. And he doesn't need for anything. So a lot of times we'll just get toys or things that'll make his life easier or more comfortable. And for my oldest, gift cards, and they're fine with that. And my oldest actually likes money too, but he tends to be very conservative when it comes to spending his own money. He will think over it long and hard because he really likes to stretch a dollar. And I'm like, if you're going to stretch your dollars like that, you're going to stretch mine too. So I make him do the same contemplation when he wants me to use my money to buy something. And I'm not even kidding. It could be the Hershey's chocolate bar in the checkout line at the grocery store. And I will tell him, if you had your money right now, would you buy that? Where is your money right now? And you know, and sometimes he's like, oh, I forgot it. I'm like, well, then you're not getting that candy bar. And other days I'm like, well, I'm feeling nice today. You know, I'll get it for you. But I sometimes I make him think, because in some cases, if he really wants it, he'll say, Mom, front me the money. I'll give it to you when I get home. But if he doesn't say that, then he doesn't really want it either. And so I told him a long time ago, I said, if you're not going to spend your money to get it, I'm not going to spend mine.
Right. I think that's true. That's the finesse move too. Like, especially with my daughter. I went in the room, she got a wad of cash stashed in her little hiding spot. And I'm like, what the hell? Because she get cash and never take it out and then sucker us into getting it. I was like, no. So now when I get back, I got a little list. I'm like, no, go get $10 that you made me spend, because my son pretty good about, paying for what he want, but her, she'll try to finesse you and forget, and then, hell no, I ain't falling for that little girl.
I love it. No, I'm hard about that. My son wants me to get something on Amazon. I collect the taxes.
you don't even round that.
It'll be like, we round it up. Yeah. Because I don't want him to assume that everything costs what you see. Because he'll say, oh, it only costs $6. I'll say, no, it doesn't. There's shipping, or we have Prime, but you know what I mean? Like, I want him to know there's not just this set cost. There's taxes I need to pay, and the taxes are this, so that he literally the next time around he'll be like, okay, I need to give you the money for the taxes. Right. And it helps him really process money, and I tell people that all the time. They're always like, are my kids too young to talk about money, or how old should I talk to them about money? And I was like, you should be the example of how to do money from the beginning.
Right.
My son was writing grocery store lists with me as a toddler. We pick out stuff together. You pick it out on the shelf. I put it on the list. We put it on the calculator. However you can make it fun for kids, you make it fun, And then later you bring in the other stuff. Like back in the day when I wrote checks for certain bills, he'd be with me when I write those checks. So he's like, oh, you got to have money behind this check to write this bill? Absolutely. Because otherwise kids grow up thinking you swipe it.
Right.
And the first time he said to me, like, Mommy, just swipe it. I said, no, but you got to have money on the other end.
Right.
And if you don't, it doesn't go through. So now he's like, oh yeah, you can't just be, he'll tell other people, you can't just be swiping. Do you have money on the other end? So,
It's funny as you talk about checks, because I I literally just ordered a checkbook. I probably haven't had a checkbook. I don't think I ever had a checkbook. Maybe one, but I haven't wrote a check yet. I just got it to kind of have it. But it's funny because I was like, yeah, you gotta have cash behind that. Because I remember growing up, boy, shit, my family would post date the hell out of check. They write a check, don't catch it till 2 weeks. Don't catch it till next Thursday. I'm like, what the hell is that? Like, you'll get a check for your birthday. You're like, oh man. They be like, hey, don't cash that check until next Wednesday. You're like, what?
Don't do that. Don't do that to them kids. That's terrible, but I know it happens because I was there. I was there.
And sometimes it got to a point when I got older, like I would get a check and I just be like, man, I ain't catching this check. I'm like, oh.
But
I appreciate the thought. I'm not falling for that.
Don't do it. Yeah, my mom hates me. My mom still writes checks, especially like to send money for birthday gifts and stuff. And
Right.
I will forget because, she's sending it to the kids. The kids open it for the card and the cash they'll run with, but the checks they
They
don't
just
always
like,
remember to give me, right? So
yeah.
out 3 months later, I'll be like, "What's this check doing in here?" And then and then I gotta cash my mom. Be like, "Why you just cash my check?" I said, "What's wrong? You ain't got money in the account?" She
I
said,
about to say,
I do, but you taking too long to cash my checks. I'm gonna stop writing you checks. I encourage you to stop writing me.
I'm telling you, trust me, if you cash a check at the wrong time, well, not now so much because they come out relatively fast. But back in the day, you cash a check when somebody didn't tell you to cash it, you gonna fuck up you gonna mess up their whole situation. You gonna throw their whole budget off.
Yeah, like I wasn't. But this is why I'm like, well, don't write the check, like,
right,
because banks still don't have to honor the date. They
right,
cash the check when the check is cashed,
right,
or
right.
1 to 2 days later, and they need to keep that money flowing. They can't just sit here and hold it forever and ever. So don't write that check that you can't cash if you still writing checks.
Right.
So
that's a damn good lesson out there for all you check writers. Get out of the Stone Ages. So let's talk a little bit. Let's shift gears, and we're gonna talk a little bit about a recession. So, and most people know what a recession is. You'll see the signs of it. Stuff will cost more. It seems like you got too much money at the end of the month. Technically, it's like 2 quarters of non-economic growth. We're in a recession, but isn't that like a super crazy, terrible Wall Street people jumping off buildings recession yet? But we are technically in a recession. And so the thing I like to say is, when we're in a recession, you see two things. You see, one, you see the government sometimes pouring a lot of money into the economy to keep things afloat. That's with a lot of programs, the paycheck protection program stuff for small businesses. You see the extended unemployment benefits. But on the flip side, depending on where the economy at, we are in that recession bubble where it looks like we're about to turn the corner and expecting a hard recession next year. But now the Feds are kind of pulling up restrictions. They're not passing out money so freely because it's a weird time to try to combat a recession, but also try to address inflation. You know what I mean? I think that's the thing that's weird with this economic period. Normally you got one or the other. This is one of the very few times where you got record, inflation and looming recession is around the corner, both simultaneous at the same time. So how do recessions impact people and their money? And where's the place you think that people see the impacts of a recession and inflation, all that first when it comes to you and your personal budget?
So I would say, first and foremost, you are correct. It is hard to fight both battles on the same front, but it's what we are having to do because prices are going up and the cost of the same gas you bought last week is not going to be the price tomorrow. You also have the recession where this is economic downturn 2 quarters in a row and you have companies panicking. So the first thing I would say is the recession, the normal impact of a recession could very well mean the termination of your livelihood, i.e. your job. And we've seen that. We've seen a lot of tech companies letting employees go because they're not sure what's happening. They don't know what the future holds, and they're not sure they're going to make those numbers. And they still have to be profitable for their shareholders, or they still need to, have positive balance sheets.
Right.
And so they are letting go of those what they consider to be expendable employees. And so on an immediate front, that's impacting livelihood. If you don't have an emergency fund with 3 to 6 months saved and you're not able to get a job right away, you're going to find yourself living off credit cards. You're going to find yourself potentially losing your home if you're not able to pay for your housing, and other things will trickle from that. But that's normally a part of that recession, is the companies are going to tighten their belts. They're going to get rid of what they, previously considered essential employees when they were booming. Now they're not so essential now that they're not. And that's going to make people make some tough decisions, because assuming you have two household income, you might be able to make it off of one income depending on your finances. But if you're a single income household and you lose your single income, you're finding yourself in a tight spot. And if you don't have that savings under your belt, you will be living off of credit as long as you can. And then eventually that's probably going to be a problem. But then on the same side, inflation is going to eat away at the cash you do have, because now you're spending more money to live, to eat. If you're going to do any activities, those are probably costing more as well. And you're finding yourself using more of your money to live. So it's a really tough spot, and I feel for people. Everyone's impacted by this, entrepreneurs, employed, because everyone's going to start thinking harder about, what do I spend my money on? And that's going to impact certain businesses that may not be recession proof. There are certain luxuries we saw right in COVID. Travel was hit really hard, because when you are facing an economic downturn and you had a pandemic, wasn't anybody traveling. So if you're in a business like a travel industry and nobody's traveling, what does that mean for you? So I always try to also encourage entrepreneurs to consider, how can they make their business recession proof? And for some people, that might be impossible. How do you make a travel business recession proof when no one's traveling? You don't. You have to pivot. Maybe you turn it into a book about travel guides that people use later, but nobody's really going to invest in that, right? When they're trying to eat. So there are some businesses that will not be able to pivot, but if you are in a service-based business that can pivot, go from being in-person services to virtual, like I did for insurance stuff, you might make it, right? But if you're in an industry that can't pivot, you might not. And we saw that in the pandemic.
Right. It's funny because I think it holds true for entrepreneurs and people in their household finances. You have to, for a business, I always use the phrase, you have to evolve or dissolve. If you can't evolve your business to what's going on, your business is probably going to dissolve. And that same meaning holds true for your finances. One of the things that I saw that shocked me most during the pandemic is the amount of churches that were losing their business. And I was like, why are all these churches that were open all these years losing their business? And it was because a lot of churches had some old school ideologies, and they could not wrap their mind around, how do we do this virtual? How do we make our, members be able to pay tithes and get the experience and get the sermons? I mean, people were just not prepared for that. So, that's definitely a thing that I hold true, is you have to evolve, and evolve can be a bunch of different things. It could be taking a pivot to do something different. If you're doing travel, hey, you may want to pivot and turn and do something else if you can't think of a way to operate it in whatever the current economic situation is. For your household, evolving may be, hey, you know what? You may have to go hop on that car and do some Uber Eats, do some DoorDash. I did DoorDash. I did Uber before. I hated it, but I did it because I was like, you know what? I want to make a couple extra dollars, and I don't want to spend anything or have to time to do all this. So you have to be willing to adjust and not be too proud to do something different to fix your situation. I mean, a lot of people, and I've seen people who they lose their job and they're like, I don't want to collect unemployment. You don't want to collect unemployment. That's your money you getting back. You've been paying that. You've been paying that all these years. You better get your damn money.
Okay. Did you see my face? I was like, wait, don't collect your money.
I got fired from a job. I filed for my unemployment before I got home. Before I got home, I was on the phone, like I was on the website on my phone, like just doing all that stuff. But a lot of people are too proud to do stuff, or they, I want to wait until I find something that's comparable in salary. Sometimes you got to just be willing to do what you need to do so you can
It
have,
is.
have some income coming in, supplement
Yes.
that loss some way. You know what I
Yes.
mean?
Facts, facts. No, I pray I'm never that proud, because sometimes that's what you need. That is literally the intent of the services, right? We
Right.
created these systems to help ourselves when we need help. And I don't think anybody else of other color and suasions has issues with taking the benefits they're entitled to. So we don't need to shy away from taking the benefits we're entitled to. And trust and believe every time you got paid on that W-2 job, you were contributing to your future unemployment option. So exercise your option.
So let me ask you, when we talk about recession, and there's normally a couple of schools of thought. You have some people who may be in a position where they're barely making ends meet, and they're going to be hit different than someone who
Mhm.
may have a little bit of an emergency fund versus someone who just has, they got a fully funded emergency fund plus some. So they could go a recession and go probably a year and not cut back on anything, and just continue to move. So let me ask, what are some things that you've seen in your experience or that you've done if economic times get hard to either preserve your money or ways that a lot of people still make money through certain investments in a recession?
Mhm.
And I'll tell you, because one move that I use, and it's funny, I was just telling somebody this today. I was like, anytime I'm at a job where I accrue leave, I always am real conservative with my leave. I don't take a bunch of leave during Christmas because I always want to get in that area where I have use or lose leave. Because how I look at that is, once I get to a point, like next year, I'll be at a point where all the leave I accrue is just extra. It'll be leave I got to use before the end of the year. But the reason I do that is because for me, that's another way to have a built-in emergency fund of 2 months if you lose your job. I've lost
Mm.
my job before, didn't have a fully funded emergency fund, but because I was in that use or lose category over the years, I was real cautious with how I used it. I knew that, hey, I got 2 months of paycheck coming immediately in one lump sum. And that was a 2 month buffer that before I even had to go look at anything else or think of anything else. So that's one little secret that I used. When you get that leave, I understand you want to be with your family and hang out with your family. But like today, everybody in my family was off. But you know what my ass was at? I was in here on my computer doing the lawyer stuff. So that's one of the ways that I think that a lot of people can take advantage and give yourself a buffer if you have an employment. But what have you seen, things that people done to kind of curb the recession, or places where people may move money to try to preserve it during those tough times?
That I just want to commend you, because as someone who is continuously in the negative of leave, because
Mhm.
I am always on somebody's trip,
Right.
I've never thought of leave in that way. I mean, I have in a sense for retirement purposes. I know a lot of my clients close to retirement will save their leave in their couple last year so they can get an additional. When you save your sick leave, you get an addition. In certain companies, you get an additional year of retirement, and in other places you get that lump sum. But I never thought about it in the sense of backup emergency funds. So that's really, really dope. And then hopefully you guys run that again if you didn't understand it, so you can really understand the power of that. Because essentially, if you're fired from a job, or you need to take a break, whether it's maternity leave, paternity leave, you now have this paycheck coming to you because you have an extra stock of leave. So that's dope. What do I do, or what do I recommend? So I'm going to try to give you an example for each type of person you
Hmm.
named,
Hmm.
and that might be the most beneficial. So for someone who's of lower income and they just assume they don't have enough money to make, save, or to save or invest, the first thing I want you to do is look at your budget and your numbers and really do the math. Don't try to guess, don't try to speculate. Pull out bank statements, highlight categories that are the same, and really understand how much are you spending on gas, food, utilities, and everything else. And then I want that person, if they realize they are operating in the negative consistently, You need to ask yourself why. And sometimes you need to make more money. Sometimes it's a budget thing. Cut back on lattes and, whatever,
Right.
avocado toast. But a lot of times, it's you need to make more money. And sometimes I have to tell people that in a very nice way. Like, look, I know you're trying to rob Peter to pay Paul, but you're running up short because you don't make enough. And you
Right.
either need to educate yourself to make more or to qualify for those opportunities, or you need to get a side hustle, or you need to figure out, what is marketable or where can I make more, because what I'm bringing home is not enough. And
Right.
sometimes that requires getting educated. Sometimes it requires the side hustle. Sometimes it requires, better spending habits. So that's for the lower income. But even in the lower income, when I was a student, I opened this Roth IRA, but after I went back to school, I didn't make a lot of money, right? I didn't have a lot of money, but I saved my coins, and that became an extra amount of money I would save every year. Literally, I would try not to spend my change. So before there was Acorn and Digit, I was saving my change.
Right. Right.
And I was using the annual change to deposit into my investment account, even as a teenager. And then I used, I would save 10% of whatever I made. So, and I like percentages because then if you're not making a lot of money, you're still saving something. So try to save that 10% and it will add up. And it'll definitely put you in a better position than if you had zero and you come up with an unexpected expense. If you're someone who makes more money, and you're in that position where you have the emergency fund and you have the access, a recession is a great time to rack up on things that are on sale. So that's your stocks. That's, even in my case, hotels. So in 2020, I invested in my first hotel, and it was a Hilton in El Reno, Oklahoma. We got it at a steal because the owner had 8 hotels in his portfolio. He was hurting on all ends, and he and the bank were asking us to come in and save the deal, right?
Yeah, right.
So I got a hotel with other investors at a deep discount in the middle of a recession. And after the recession, or not recession, in the middle of a pandemic, excuse me. And then we knew, hey, nobody's traveling, but we suspected they're going to travel again one day, right?
Right.
So we got a very lucrative business, because when you buy a hotel, you're buying the real estate and you're buying the business. You own
Right.
the building and you own the hotel nights and you own the money from the restaurant and the little store and all that comes with it. So when people started traveling again, look at that. I bought a investment underpriced in a difficult time, and now it is profitable. Who gets to enjoy the profits? Me.
Right.
So that is something that I would say I did a lot of, even in the pandemic and even in a recession. I attempt to maintain whatever I'm investing in retirement accounts, whatever I'm investing in my investments, trying to keep that consistent, because now my investments are purchasing stocks on sale and I'm still getting the value of that consistent discipline of investing for my future. And if you have even more capital or cash, you can take advantage of fire sales on real estate like hotels.
Right. Right. I think that's a good point. There's always a way for you to make a maneuver so that a recession isn't too bad for you. Whether that's cutting back, whether that's doing additional work to get additional employment, whether that's, hey, if you're in a position of access, you continue to do what you're doing, keep copping stuff. Because I already know, like I'm stashing because I'm a buy apartment complex. And when I get my apartment complex, I don't like to. I'm not going to get a loan from a bank and nothing. No, I'm gonna pay for that shit straight up cash. Because I look at real estate different from how I used to look at real estate and think of it in terms of doors.
Mm-hmm,
Like
mm-hmm,
I had this many doors, but then when I thought about it, I'm really a risk averse person. So for
mm-hmm,
me, I had this conversation with my guy JT, who's on when he was on the show. When I was for me, I think it's more valuable to have one complete property that's paid for than to have 3 or 4 properties with a mortgage attached. Just for the sole point of, yes, I understand mathematically I can leverage the risk and do all of that stuff. My general rule is I only carry one property with a mortgage. So I got land that's paid off. I got a house that's paid off. I'm willing to have one property that has a mortgage on it because I can use that income to pay it plus the income from everything else to pay it. Then once that's knocked out, because for me, I just like the clean
Mhm.
money that comes in. I've done it the other way. I've seen people have 35 doors, but I know people as well who had 35 doors and the cash flow was great, but something came up and things just kind of ended bad. So I'm really a risk averse person when it comes to real estate. I tend to move more so, hey, I want to cash flow it, and if I get it, I want it to be something that I can pay that off in maximum 24 months, no more than
Mm,
36 months. That's just
mm.
kind of always been my approach.
That's interesting. I have a different approach. I definitely have mortgages and I have utilized tenants to pay down those mortgages. I
Mm-hmm.
do like your theory and concept of having a paid off residence. And I do believe in that. I even have some clients whose families, that is a requirement that they have a paid in full house in the family. So everyone um, always has a place to live, right?
Right, 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 right.
So I get that. I don't know if I would go to the extent of paying in full for an apartment subdivision because I'm also in apartment syndications. They are very expensive, and that's
Mm-hmm.
a lot of money to put into multiple doors at one time. But I would totally do it for a lower priced real estate opportunity. But I do see the value in leveraging, at least for apartments, when you're
Mm-hmm.
hitting, I have 354 units in a property in Orlando, and I just would never tie up that much of my money to do that by myself.
Yeah.
But doing it with a group of investors
Right, 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 right,
has made it much more affordable. So it just depends, but I like it. I think the
right,
idea
right,
is
right,
solid, right?
right.
Because again, when you own something, you can leverage it even still. You can refinance it and pull money out if you needed to, or sell it if you needed to. There's so
Right,
many
right,
ways to
right,
make money from it.
right.
But I will say, I at one point I had another option. So
Mm-hmm.
just listen to this. So there is a possibility where you could have a mortgage fund, right? My
Mm-hmm.
mortgage fund is where I'm putting excess money into this account that makes more money than a regular bank account.
Right.
But it's there for when I want to pay off my mortgage early if I decide to do that. But what I'm doing is making sporadic additional payments throughout ownership, but not the lump sum.
Right, right, right.
And the reason I like to do that is because, again, if life happens and I'm suddenly not in a financial position I was before, if I was putting all my money into my mortgage, now I need to get money out. And the only way to do that is to refinance or to sell, right?
Mm-hmm. Mm-hmm.
Well, when you don't have income because you've been fired or laid off, a
Right,
bank is not likely to allow you to refinance because
right,
you now are not in a position to pay that loan, and they're very concerned about getting their money back. That's why
right.
they're in the mortgage business, right? So I do sometimes tell my clients, like, okay, let's give you options. We can make an extra payment a year or a couple extra payments a year. But if you have excess beyond that, we can put it into a high performing investment account or
Mm-hmm.
something
Mm-hmm.
that, hey, the money's there. If you decide you want to pay off your mortgage 10 years earlier, we'll write the check from
Right,
that
right,
account.
right.
But in the meantime, let's just have it earn money and be there in the event something happens, especially if someone is like, I think I want to change careers
Right,
or,
right,
something, and they're just not quite sure that cash flow is going to be there. And they don't want to tie up that money into the house that it's going to be difficult to access.
right.
But
Yeah.
I think it's great. I think being into real estate is great. I think land is finite, right? So it's
Mm-hmm.
always going to have a value, and there's always ways to make money from it. So I love it. You can do so many things with real estate that creates additional income for you. And I definitely agree that, like, there is power in owning at least one thing paid in full, if
Right.
not more. Mhm.
And it also depends on what your ultimate end game or end goal is. You know what I mean?
Mhm.
Like you said earlier, for you, like, oh man, like the entrepreneur thing. And like I had this conversation with one of my homies and partners in the chat, and I was like, something would have to be really amazing for me to walk away from my job. Because I love what I do, and I feel like I'm adequately compensated for what I do. So like, like for as far as I'm concerned right now, y'all gonna have to roll me out on a gurney. So it also depends on what you want. Like I don't ever have I don't want to be like I don't want to be a black Grant Cardone with a bunch of with 55,000 properties. You know what I mean? What I own is specifically identified as a number of rental income I need to accumulate by this age, and it's
Right.
easy for me to get that amount. I feel like it's easier for me to get that amount with one or two paid properties versus 5 properties that have mortgage attached. Now, and I also think another thing is, and you have to do this whether it's a recession or not. Your investment plan or goal will evolve as your situation evolves.
That's
Like right,
facts.
like right now, I know a lot about options and I play with options, but I don't trade options heavily because I have a specific net worth amount that I want to get to. And once I get to that, then I'm going to say, okay, I'm going to increase the options that I'm doing because I want to see if I can do it to generate X, Y, or Z. So whatever your plan is probably going to evolve. You'll set a position like, oh, I want to have this. And as you start to get closer to that, you'll push that goal post a little bit farther back. You'll be like, oh, I wanted to have 3 months emergency fund. And you'll see when you build it up, you're going to be like, you know what? I think I could get 4 months. I think I could get 5 months. The next thing you know, you look down and you're like, damn, I almost got 6 months on emergency fund. I think I can stop this. And so you definitely have to reevaluate your situation because it's going to change as the environment changes and as your financial situation changes as well. So
Absolutely.
I asked you a question. Like what moves have you seen people make during times of recession? And I tell you one big thing that I've seen a lot of people do, and I've actually talked about this on the channel. Most people, when it comes to their investments, they got 2 or 3 options. Like if me, I got a lot of more years to working, so I'm not changing nothing. I'm telling you, hey, I don't care. Market down 30, 40, 50%. You know what I'm doing? I'm doing the same thing I'm doing. Now, I'm buying this same amount. I might buy a little bit more because it's down. So you got a school of people who do the same thing. You have another school of people who may be a little bit older, maybe near retirement. Like this is something that, my mother's doing. Like, whoa, hey, my mother's in her 70s. She like, I don't want to see my portfolio down. So she'll take a certain percentage out and move it to government bonds because government bonds are giving high interest rates right now because she's not worried about it growing. She just kind of want to preserve her capital. But then you also have some people I've seen who they'll move from, okay, these investments are a little bit riskier. Let me move it to something less risky. And in a time of recession, the stocks like the Fords, the Teslas, those type of things, when times get tight, nobody gonna care about that shit. The things that people are gonna buy when times get tight are gonna be commodities like foods. Like Kraft Heinz is going to be a great stock. Pharmaceuticals is going to be a great stock. Those type of commodities are the things that I've seen historically go up and the things that I redirect my portfolio to. Like, yeah, the marijuana ETFs are cool and they got a little bit of a bump, but no, like during these times when things are going down, you want to look at things that people are going to buy no matter what. And it's not a damn Tesla. It's Nestle bottled water. It's food. It's Tyson's chicken. It's all of those type of things that people are going to die for or going to want to have stockpiled. Those are the things that I've seen people looking at.
No, it's absolutely that's correct. I tell my clients, they wanted to do a whole 180 on their retirement accounts when the market started to shift. And I said, no, we are invested in the right funds. And
Right.
this is where you need to be and just continue to put in your contribution. In fact, if you can get more of it while it's on sale, go for it. Because of course, the same thing happened in COVID. We had like a downturn at the very beginning of the pandemic when we formally announced it was a pandemic. And then we had this uptick I remember my retirement account took a dive like March, April. But by August, it was
It's
well
crazy.
beyond where
Right,
it
right,
was. And I
right,
was
right, right,
living it up like,
right.
yes, look at where we are. And I was just like, I did nothing. I talked about this on my show. I did absolutely nothing but continue to invest the
Right,
way I always have. Now, obviously, if you take a hit on your income, you may need to make some different choices.
right,
But
right,
if you're making the same income and you're pretty much living the same way, give or take inflation on the cost of your food and gas, then you could continue to invest the way you're investing, right? I don't believe in making any shifts. And I do caution people from deciding to move everything to government bonds and,
not everything.
because
A
moving
percentage maybe.
everything can be detrimental too. You're moving it into something that's not going to perform as well as
Right,
other investments out there. And if you're only in cash, like say you cash it all out and you leave the cash sitting in the bank, that's going to harm you in the long run too, because your
right,
cash
right,
is going to lose money from inflation. So you have to have a balance, but it has to be a balance that you can sleep at night, right?
right.
Like, I'm never going to tell someone bet it all on black, and then you're like at night you can't sleep, you're watching the news every second to watch the fund and how it's going and this, that, and the other, and you're like, going crazy. Because to me, that's mental health is first and foremost. If you should never be in an investment that's going to drive you crazy or cause you anxiety or stress,
Right,
right?
right.
But I also don't want you to lose money and then you put in $100 and 10 years later you get back 25. That wasn't the intent either. So you have to have a balance that makes sense, right?
Right,
And for
right.
me, that's finding your happy place. So I do a lot of, I ask clients a lot of questions, for example, about their investment knowledge, expertise, and how they emotionally deal with the news and what's going on, so that we can pick things that they'll be more inclined to kind of not look at and not want to sell, during times like this, because we know that this is temporary. And I don't really do a lot of individual stocks, if I'm being honest. I do EFTs and
Right, right,
funds that have more than one company, more than one sector.
right,
So
right.
I'm not
Same here.
100% relying on fill in the blank company.
Right,
And
right.
then when they announce we've had losses for the quarter, my investment,
Take a
plummets.
hit.
Right. Um,
Right,
and
right.
I do agree with you. Like we're gonna hopefully all brush our teeth and need medication, and so
Yeah,
go for those. If you are doing individual stocks, like Procter and Gamble's and medical, like you said,
yeah,
pharmaceutical companies and industries that we're going to need to continue to live,
yeah,
right? And
yeah.
then you may do a little bit less on the luxury optional stuff.
Right, right. I think that's all a good point. And like I said, it all depends on uh, with finance, a lot of it depends on what your goal and your end game is. That's
Hmm.
why it's never, what I do is going to be different from what you do, and vice versa, because all of our situations are different. I do agree. Like I'm not my mother moved a percentage of her portfolio in bonds, which makes sense considering she's in her 70s. I understand why you need to move a percentage over there to get 8% versus the nothing percent that you're getting now, the negative percentage. So I I got it. Me personally, I stay away from government bonds. I don't see the benefit of locking my money up for 8% because I already know me. I got the worst luck in the world. The minute I put my money in the government bond, like, ooh, government bonds are 8%. I'm gonna lock it up, and then tomorrow the recession gonna be over, and the stock market gonna go up 20%, 30%, and I'm stuck at 8%. Like, God damn it! I should have known better. So I'm like, you know what? I refuse to lock my money up for that long, for a year, 24 months. No, if I'm gonna do that, you might as well get a CD, in my opinion. I know I have bad luck, so I'm not doing it. I don't want like to lock it up. I don't like those options. So I just my general rule is I just let the market do the market. The way
Right.
I feel comfortable enough with my portfolio and my investments that as long as I don't need it now, I'm not looking at it. I just
Right.
don't really care. Like I don't know, how often do you actually look at your portfolio? You probably look way more than I do.
I'm honestly no, I try to do quarterly, but sometimes I forget. But I'm not looking at it every day.
Right, right.
Like I'm not, because I'm not trying to spend that money right now. To me, it's like that's just not on my mind. You know what I mean?
Right,
I
right.
have always had a long game for investing. A lot of my investment projects, like the hotels, apartments, those are a 3 to 7 year plan. So
Hmm.
for me, yes, I get access to the financials and I'm looking at how the investment is performing on a monthly or quarterly basis, but I'm not looking to cash out because I
Right,
know that my prospectus was based on a 5 year ownership plan or a 7 year ownership plan. So I do the same thing with my stocks and my retirement account too. It's like, yeah, I check on it. Like I make sure my deposits are being made and my funds are being purchased on that monthly basis. But I'm not like, oh my God, it's down 500. What
right,
should I
right,
do? You know,
right, right,
because there is a chance you make too many changes, you're going to miss out on the game.
right,
So
right.
I really do stick to a strategy that I can live with. But another thing, man, I was just thinking about something else that people can do, and then I forgot. But it's just like I definitely think if you this is what I was gonna say. So if you genuinely do have that extra and you are not really gonna miss if you pull out a portion of what you have in one place to put it somewhere else, one of the good things, quote unquote, about a recession is the savings accounts are starting to get higher interest
Hmm.
rates,
Hmm. Hmm.
and banks are starting to give you bonuses or cash bonuses for
Right,
opening up certain accounts and holding money with them. They're trying to boost their reserves too, so they can make more loans at those higher
right.
interest rates and things like that. So if you are in a position, this is one of my hacks. If I have a fully funded emergency fund, but this really happened, Ally Bank is offering 2% interest on a high yield savings account if I put money in there, and they're going to offer me a signing bonus for opening
Mhm.
the account. I'm going to open that account, but I'm
Right,
not going to move my entire emergency fund to Ally Bank. I'm literally going to look at what is the max required to get the full benefits.
right,
I'm
right,
going to
right.
cut that out of
Do
my
that.
emergency fund,
Right,
move it over to Ally
right,
Bank. I'm going to take
right,
my cash
right,
bonus. I'm going to take my additional interest, and if I like the bank, I might stay once the conditional period is ended, which actually happened. I'm still with Ally Bank. They're
right,
not paying me to say that, but yes, I am.
right,
But that's what I do. It's like, I'm like, you know what? This money's sitting over here. This bank's not offering me any money. Let me go to this bank that is. And so I do shop rates for high yield savings accounts and other bank bonuses about 6 months to a year,
mhm,
just to see if I'm getting the best deal. Because if I don't like the bank or
right,
I
right.
can do better, I'm going to take some of my money and do better. And then
So
I'm going to take that cash bonus and walk it to the bank, So so that is one thing I do, and that doesn't change your net,
right, right, right,
in
right,
any way. I mean, yeah, you earn that cash bonus now and you're earning additional interest, but you're
right.
you're just reallocating
Yeah,
money in one
moving it
account.
from A to B.
Right.
There's a guy, his name is John. His channel is called Bank Account Bonus Central. And when I found John, I was like, what? This dude making money off this dude made it wasn't last year. It might have been 2020, I think. 2020, he made, I don't know what he did in 2021. I think it was 2020. He made $10,000 off of bank account bonuses.
See?
Doing exactly what you said. $10,000, that's almost $1,000 a month. Think about it. He made $10,000 in 1 year just opening an account here to get this $600 and moving this money, letting a couple direct deposits go in. He got to a point where it was actually amazing. I was like, and I started doing it, and I was like, damn, it take a lot of effort to catch all
Yeah.
of them.
Yeah.
It's actually a job to do it, but he was so detailed. He had an account at, like, I don't know, maybe it was Chase, and they had something like $600
Yep.
if you open an account. And he was
Mhm.
like, how come y'all just got this stuff for new customers? How come it's not existing customers? And so they was like, oh, we just want to get new people in. He's like, what would I have to do to be a new customer? He's like, close your account and keep it closed for 90 days. He closed his account, took all his money, moved it somewhere else. 90 days later, when that deal popped up, he went back, put his money back in,
Yeah.
got me $600, and that was like, I mean, I'm talking about. He showed see, here's the deposit from this account, where it
Mhm.
totaled $10,000 in a year just from opening bank accounts. I think he did maybe 2 or 3 credit cards, but he mainly focuses on bank accounts. So
Mhm.
if you actually got a little bit of change that you can move from one place to another, you could really flip that. He found these banks. I'm like, the National Bank of Estonia. What did you hear this place?
No, it works though. It
Yeah,
works.
so that's definitely a plan. So let me ask. I guess I want to put a cap on this topic because I got a few rapid fire things I want to ask you, get your
Okay.
opinion on.
Well, you didn't mention credit cards in a recession. My opinion on credit cards is
Go ahead, go ahead.
avoid them if you can.
Right,
But I
right,
know for some people that's how they making ends meet, at least between paychecks. But I think even that you really need to get a hold on it and figure out why. If you can
right,
figure
right,
out why you're having to use credit cards in between paychecks and eliminate some expenses to avoid that, do it. Do it as soon as you can because they've actually already said that the households average cost of debt on credit cards is
yeah,
increasing right
yeah,
now
yeah,
and it's
yeah,
only going up. So
yeah.
this is the time to really push yourself to get debt free,
Right,
especially if you don't have an emergency fund,
right,
because it could be, I don't recommend this for everyone, but if you do not have any other option, but you have credit cards with no balances, that could be your emergency fund in a very desperate time,
right,
right?
right, right.
But ideally, I'd like you to have cash that can pay your bills because everything can't be paid for on credit. And I definitely don't want you paying for cash advances. But I have had clients who they're like, look, this expense to fix my water heater is more than my emergency fund. I'm going to have to charge it. And I'm like, okay, but let's create a debt payoff plan so you know how long you have to pay off this card and before you own your water heater outright. So
Right. I
try to
think
minimize credit.
that's a good point because somebody in my family came to me just a couple days ago, and I was really proud of them. Now I saw this coming a mile away. This person hasn't had any debt or owed anybody anything. I don't know, in probably 10 years. I'm talking about house paid for, land paid for, all three or four of his cars paid for, everything. They got everything they could possibly want. All they buying is groceries, cell phone, lights, basic stuff like that, right? And this person made a purchase of a toy that he wanted, right? So they get this toy, and I saw this coming down the pipe because I was like, they use their credit card every month. And I think I maybe mentioned this story a little bit, but they use their credit card every month, but they automatically had it to just pay off the balance every month. Well, because they were working on this project, I never forget. They was like, "Hey, I told them not to pay it off every month. Just pay $300 a month." And I was like, wait. I was like, they track your spending, right? I saw this situation coming a mile away, and I tried to warn them, but people are gonna do what they want to do. I was like, you sure you want to do that? Because if you're spending more than $300 a month, it's going to just stack up. It's like, nah, I'm good. So he told them, don't pay it off every month. I just want $300 a month coming out. What happened? Literally 2 weeks after he told them that, without unilaterally, they increased his credit limit because they already saw.
What was happening?
They ran game. They already saw. They was like, oh, he not paying the balance every month no more. Hey, let's increase his credit limit to see what we can get him to do. And he got his toy running perfect how he wanted it. And then maybe like a month ago, he was like, man, I don't know how I got it. I owe X amount of dollars on my credit card. And I was in my head, I was like, I told you, but I can't say that. I just was
Yeah,
like,
you
oh.
like, really?
I just was like, man, you know how they are, man. Hey, we all been there. But I was really proud because it was this individual in my family actually came to me and was like, hey, man, it's not a credit card debt where they just can't get from underneath it. But when you go from that on nobody nothing to now you owe somebody something,
Mm-hmm.
you gonna feel that in the pit of your stomach. So I was really proud when they reached out. I was like, hey man, sit down with me and help me crunch these numbers to it.
Mm-hmm.
And I was like, I was really proud that they asked because a lot of times, especially if it's family members, people don't like to ask.
Mm-hmm.
People would rather, my family members would rather ask you for assistance than ask me for assistance. That's just how it is because they know me. It's a little weird. It could be awkward. So this weekend we're gonna sit down, and I already crunched the numbers in my head. But credit cards is a cold game. The minute he changed his payment status, they like double his limit without him even asking. He was like, I don't know why they doubled my limit. I was like, oh, I know why. They see what's coming. But I definitely agree with that. Credit cards during the pandemic could be problematic and may be your only option. Now, let me ask you, what if you're in this situation? Because this is something I did before, and I was like, you know what? I actually borrowed money from my retirement account.
Mhm.
I borrowed money from my retirement account. One, it wasn't a substantial amount. It wasn't like $30,000 or something like that. It was something to okay. I knew I had a couple of months leave stacked up. I was like, let me get a couple months just in the bank, just in case, because I know I had an X amount of days, 60 days to put that back. If I didn't use it and it was kind of no harm, no foul, it just go back
Mhm.
or what have you. And so, if someone they don't have any credit card debt, but they don't have an emergency fund, but they lost their job and they got a retirement account. Now, tax implications, depending on what the interest rate be, that borrowing off that retirement account, if you don't pay it back, could be more costly in the long run than getting the credit card at 21, 25%.
Mhm.
But
Mhm.
a lot of people, those may be their options. How would you, what advice would you give somebody to evaluate if these are your only two options to give
Mhm.
you a buffer for the
Mhm.
next few months? Consider these things when weighing these two options.
So when it comes to credit cards, when it comes to retirement, I'm very cautious because it really depends on your age and where you are in your financial journey. If
Right,
you're 25, 30, and you are expected to work another 20 to 30 years, I might be more inclined to support you borrowing from retirement than someone who's 60 and told me they want to retire in 5 years,
right.
right? Because we all know the name of the game is compound interest and time. The younger person has time to rebuild that loan. The 60-year-old, not so much unless they come into the lottery, right? Or we have a really aggressive plan on how we're going to pay this back. So I'm always hesitant to say, I want to buy a house. Let me use my retirement for my down payment. That doesn't mean I don't do it or recommend it because I definitely have borrowed from my retirement account to invest in real estate. But for
Mm-hmm,
me, I did it at a very strategic time in a very strategic way. I did it during COVID when they said that you could take money out of your retirement account at no
no
penalties,
penalty.
no
Right,
interest.
right, right.
And then I also took the money and put it into a different type of retirement account called the EQRP that
Mm-hmm,
allows you to invest in real estate. So
right,
yes, I took money out of my retirement account, but I put it into another one and I leveraged it to invest in real estate. And now that money is still earmarked for retirement, but I'm able to control at least the portion that I put into this real estate where it's invested. So I'm not required to be in
right.
works retirement options,
Smart.
but I'm in Hotel X or apartment syndication Y. So that's one way to do it when you're strategically borrowing, right? But for those who are borrowing out of a necessity, here's what I would say. I normally don't recommend you borrow from your retirement account to pay off an unsecured debt. So for
Mm-hmm,
anyone who's borrowing from their retirement to pay off credit card debt because they think that's the only option, I actually challenge them to make more money first. Get a
mm-hmm,
side hustle, try to create income before you resort to borrowing from your future to pay for credit cards that probably is for stuff you don't have, don't remember, or you've probably already worn through and thrown away, right? Or hamburgers you ate on a credit card that now you paying interest on. So
right.
that's where I'm like, if you can avoid that option because that's not the best use of your retirement funds that you know you're going to need to pay off unsecured debt that you've already spent. You just need to come up with a plan and pay that off. But if you want to buy a house and you absolutely have tried to save your own down payment and you've come up with some cash on your own, but you need a little bit more to get to the finish
Mhm,
line,
mhm.
then
Yeah,
I'm like, okay, I
I
can
like
see
that.
that. But I
Right,
don't think your retirement account should be 100% of where your down payment comes from. You know what
right,
I'm saying? Like, I
right.
feel like you have to have skin in the game. I know this is not the scenario you presented, but I also don't think parents, listen up, parents, I don't think you should be borrowing from your retirement account to pay for your kids to go to college.
Pay for them to go to college. They better. I agree 100%. There are certain majors. If my son come to me and say I want to major in this, I'm gonna be like, okay, well, I hope you can figure out how you go pay for school.
I'm
I'm
not
like,
even trying to be funny, but the math ain't mathing because you cannot get a loan for retirement, but your kids can get loans for school. That's really what it comes down to. And I
right,
know
right,
that there's others who are going to have their feelings about student loan debt, but I will tell you, I don't love student loans and I wish we had a better system. And I am doing all I can to send my kids to college, loan free. But at the end of the day, I know that my student loans pushed me to have skin in the game on how I performed
oh yeah, yeah,
educationally
without a
and
doubt,
how I paid
yeah,
my bills when I got out. Because let's not get it twisted. Paying back my student loans built my credit, right?
right, right,
So there was some benefit to having some college debt in the form of student loans. But I also hustled my behind to get full ride scholarships by the second year or the third year of my college education
right,
because I was like, this two job thing, because I worked two jobs my freshman and sophomore year, and I was on scholarships to make ends meet to go to the school I wanted to go to. Because I wanted to go to an expensive school, and my mama was like, I ain't got it. So
right, right,
you gonna have to figure that out if that's your number one choice. So I had to sacrifice, go to school full time, be a person with two jobs, and continue to look for scholarships. I knew that wasn't sustainable forever. And I knew that there was money out there. It's just I didn't qualify for all of the money before I went to college. So I kept looking. And that's what I feel like people don't do is they just assume like, oh, my financial aid package, this is all I have. And I'm like, no, there's plenty of people giving away money. I got money because my dad was in the military. I
right,
got money from my local bank because I was like a community member. I
right,
got book money from a sorority who was like, we just want to cover a book or two. I'm like, I'll take your $200,
right, right,
like, and then one day I got the full, I'll pay
right,
for 3 years of school. So I ended up getting a prestigious fellowship that covered all of undergrad, 1 year of grad school, and came with a job. That was the
right.
creme de la creme, right?
Yeah,
But
you got
it,
the Michael Jordan deal.
yeah, but it took 2 years to
Right,
find that
right,
opportunity. You see what I'm
right,
saying? And I feel like so many people fall short because they don't want to write an essay. And I'm like, look, like my kids, I'm like, y'all gonna write some essays. If
right,
y'all
right,
don't qualify for financial aid because of me and your father's financial situation, you gonna get some merit scholarships.
right,
I
right.
just feel like you got to have some skin in the game. So honestly, there are very few reasons on why you should borrow from your retirement. And even when you do to buy a house, I still think it should be only a portion of
Yeah,
what you're coming to the table with, not the whole thing. And
yep.
never borrow to send your kids to college. I feel like there are so many options. You could do community college, you can do
Right,
cheaper, you can do local. But then also, if you can start saving for college when your kids are younger, and then decide, I'm going to contribute. Here's my contribution. But I'm
yep.
not in a position to do 100%. Hell, I'm not in a position to do 100%, not because I can't financially, but because I was like, I want my son to have some type of skin in the game. So I'm going to make them apply to scholarships. You see what I'm saying?
I'm not opposed because I told my son, your option is you go where we can afford. And if you want to go someplace that we can't afford, this is the amount that you're getting, no matter where it is. If you want to go someplace we can't afford, the rest is on you. But I'm actually not opposed to. I told my wife this. His first year, go and let him sign a couple loan documents. While you in school, some of them loans ain't accruing interest. And go ahead, because I said then I'll turn. When I signed those loans, trust me, I've never not been on the dean's list. After my first year, I got a full ride to law school. So, and I barely got into law school. I was on a performance-based admissions program, but I was like, no, let me bust my ass so I could get it. But I feel like this is my view, and I told him, and he was like, okay, I accept that. I was like, if you sign that loan paperwork, and you get B's and a couple of A's, okay, that's fine. I go ahead, take care of that, and I know I can support you. If you on academic probation, I'm like, nah, that's your bill, dog. Right? That's like 55% of people in college don't graduate. The odds aren't in people. Hey, I think one's a smart guy, but a lot of people go to school and don't graduate. And like, nah, bro. I'll tell you right now. Yes, I know this is crazy. The money is there, but if I flip out this money for you to go to school and you don't graduate. I would be pissed because I could have had a convertible that me and your mama drove around in the summertime, trying to look young.
Not a convertible though. Yeah, I mean, look,
Yeah,
I'm just doing what I can, and people always think like, "Oh, you gotta have all this money." But when me and my husband first got married, first had kids, I didn't have it all rolled together. I didn't know all that it cost. So I said, okay, $25, $50. Then it was
right.
$100 a month. Now it's more than that. But I'm creating a nest egg and I'm creating multiple nest eggs. I've even leveraged life insurance for my oldest to figure out how he can have tax-free dollars in the future. And
Mhm.
there's just so many different ways to do it. So I definitely agree with you though. Like I think I was a better student because I knew
Right,
that I was paying for it,
right,
literally.
right,
And I wasn't about to waste nobody's money and not anybody's time. So
yeah.
I
I,
agree. And I'm not gonna pay for C's and D. We don't even accept that in
yeah,
elementary school. So we're
no,
not
yeah.
about to accept that in
I
college.
agree. I agree.
Mm.
I'll never forget. I was in school, and one of my homegirls who I went to high school with, we was in the same college, and she was like, "Come on, let's skip school." And that's how I knew I took it serious because I looked at her. I was like, "Are you crazy? That's $638.42 every class you miss." And she just looked at me and was like, "She's like," I said, "I don't know about you, but my parents was like they was like that. They was the worst type of. They were in the worst financial position ever." Where they don't make enough money to help you go to school, but they made too much money for you to get certain things.
Sucks.
I was like, I said, y'all in like financial limbo. Y'all don't make enough money to just pay it outright, but you make too much money for me to qualify for a bunch of stuff. So I definitely agree with that. So let's close this out so I can give you some rapid
All
fire
right, let's
questions that
do
are
it.
going to be fun. Get quick takeaway. Give us a quick takeaway on, hey, the recession is coming. Winter is coming in the words of the Game of Thrones fan. The winter is coming. What is a quick 3-4 points of what can you do to prepare yourself for winter when it's coming? That's how we're gonna
Get
close that out.
get your emergency fund up. If you are not able to get to 3 to 6 months in the next couple of months, get to the first month. Some places are expensive. I live in DC, it's really expensive, but it took me years to get 6 months. But shoot for 1 month, shoot for 2 months, and then eventually you'll get there. The second thing is minimize credit card debt. If you really don't need it, you don't need it. And if you got to charge it, you probably don't need it or you can't afford it right now. So skip it. And then third is really start to use whatever money you have to put it in safer places. Like keep investing if you're already investing, but try not to, do too much on Bitcoin if that's not what you're used to investing in or anything else that may be new or risky. Just skip it for now, and concentrate on the things that have been working for you, that work and that you understand, because this is the time to really build that. If you haven't built the foundation, to build the foundation so you can be okay as we get through this recession.
Dope, dope. Hey, I appreciate that. And next time we gotta do this show live because we probably like right down the street from each other. So
I know,
I was like,
right?
you'd have been the first non-family member guest to be in the DFD studio slash gym.
Yay. I would love that. Let's do it. Let's do it.
Yeah, we
No,
definitely
because
gotta do that. So I like to do a segment what I call financial overrated or underrated. Okay,
okay.
I'm gonna throw out some topics. You give me your, is it overrated? Is it underrated? So that's just the name of the game. So the first
Okay.
thing we're gonna talk about is the fire movement. Is it overrated or underrated?
So I think it's overrated in certain communities, but for certain people, I think it's
Mm,
overrated for non-people of color. And they haven't really, don't worry, we have our people who are achieving it, but I want to see more people of color in that space who are achieving fire. And I also want to see more people in that space who are achieving fire in higher expensive places to live. Because I'm not moving to Bend, Oregon in
yeah,
order to achieve fire. I'm
yeah,
in Washington,
yeah.
D.C. I'm
Right,
in
right.
Virginia, okay?
I
I, I'm fired too, but I'm not moving to BFE just
right,
so I can pay $2 for my house
right,
and have my kids, running around in
right.
cars. I want to be in a city that has stuff to do, okay? And
Yeah,
it might cost more than Bend, Oregon. And I'm sorry if I keep harping on that one city, but I saw a documentary that was like, we were high income earners and we moved to Bend, Oregon, and now we're fire. And I'm like, no.
I agree. I say all the time, I think it's overrated. One, I think most people, they just do something else outside of whatever their 9 to 5 is. That's most people. But two, I have and you and your husband probably done this. I've had a conversation with my wife because I control 97% of the investment. So I had to have a conversation. What is your expectation of retirement? Because I know my wife. I already know what she wants. I know, hey, we're going to have a vacation home out of the country because that's what we work for. You know what I mean? Like, we don't bust our ass to not have nice things. So I agree with that completely. Fire for me is not living in a mobile home, traveling the U.S. Hey, if that's you, that's great. But fire for me involves a home overseas. So I don't ever want to be in the cold. I want to be overseas, and then when it get cold over there, I want to come to my warm abode in the States. So my fire is going to be a little bit highfalutin. So I think it's a little overrated in that regard that most people aren't truly fired. I see a lot of people who say they're fired and like, no, you're not fired. You're just a content creator now. I got it. You know what I mean? Which is a job in and of itself. So,
yes.
So I definitely think that's a fair point. So it's funny. I think that's a good segue to the next time. So, okay. And I know you're going to have a unique perspective on this, and we might agree or disagree. Either way, good discussion. Overrated or underrated entrepreneurship?
Oh, that's a good one. And you only get one choice. I think it's underrated, but we tell ourselves that you have to do the most to be called an entrepreneur.
Right.
And let me tell you, you are still an entrepreneur if you keep your 9 to 5 and you have a side hustle. You are still an entrepreneur if you choose to responsibly build up your business until you can take the leap and still pay your bills. Right. You are still an entrepreneur even if you decide you're going to sell someone else's products.
Right.
An entrepreneur, we have this thing where it's like sexy to be hustling and grinding and selling and hustling and grinding. But that's not what I want to do.
That shit hard.
That's hard. And I told you, I saw my mom hustling and grinding and was like, oh, I'm going to hire staff.
Right.
I'm going to have a team because I don't need to do all the things. There are definitely certain things another person can do. You can push that publish button. You can respond to that email. You know what I mean?
Right.
So I think it is important for us to have businesses. I do think that entrepreneurship is a great path to wealth. I do not think everyone is meant to be a full-time entrepreneur. And I do not think entrepreneurship where you're creating a business and a product is the way for everyone. Sometimes it is going to be the affiliate connection, giving people things they need that other people created and you get a cut. Right. You know what I mean? So that's what I mean by it's underrated in a sense, like everyone doesn't see the potential of having a side hustle or a full-time business. But I definitely think the times of that hustle and grind entrepreneur is not the entrepreneur of the future that's most effective and able to pivot. It's just not.
Right. I think entrepreneurship is overrated as hell. I think, especially on social media, if I see another bogus person giving illegal financial advice, just making my the hairs on my head stand up, it's just crazy because very few people are entrepreneurs. Most people are self-employed. That means, trust me, I've had multiple businesses that made a lot of money. I had to stop one because I was like, this isn't my dream. I want to go to law school route. I don't want to live. It was a spinoff of a business that my father had. So he put me onto it. And you can make great money. And I did very little work. I just kind of managed it, negotiated the contracts. But most people aren't entrepreneurs. I look at entrepreneurship and self-employed the same way as I look at personal finances and an emergency fund. For me, I define entrepreneurship as if you cannot do shit for 3 to 6 months and you still make the same amount of money, you, my friend, have ascended to entrepreneur status. You can walk away from the business and the business will continue to thrive. If you walk away from the business and you don't get any money, you, my friend, need to continue to work because you're self-employed, and that's the difference from entrepreneurship. I'm not knocking everybody. You have to start at one point. Most people don't just dive into entrepreneurship. You have to be self-employed. You have to build up that customer base. You have to build up that brand. But I feel like it's just overrated as hell. If I see one more guy on social media talking about get a car that's over 6,000 pounds and write it off for tax purposes and get that car for free. I don't even think you explain how deductions work. I don't even think they explain what recapture is. If you get rid of that car, it's just constant. Like, it just drives me insane. So I think entrepreneurship is cool, right?
Yeah.
And I define entrepreneurship. If you work a 9 to 5 and you invest in your retirement account and have stocks, I consider you someone who's self-employed because that's money that you have working doing something else. I don't think it has to be a product or good or services. I look at it as if you're an investor, I consider that an entrepreneur
Hmm.
or in and of itself. I think that's
Hmm.
more of an entrepreneur than somebody who's driving Uber because they're actually spending sweat equity as opposed
Hmm.
to you putting that money in. But yeah, that's my little rant because I was like, man, y'all stop hating on 9 to 5s, okay? The number of 401k millionaires like increased exponentially during the pandemic. These are people with regular 9 to 5s, teachers,
Hmm.
lawyers, postal workers. Like, you can live a great ass life being a 9 to 5 employee. And honestly, if you never work for yourself, it's the hardest shit you'll ever do in your life.
Who?
It ain't no water cooler talk. It ain't no going to somebody else's office shooting the fucking breeze, part of my language. Nah, your ass is gonna be working. So that's my take. You can tell that's a
Yes, but it's true. It's true. But I mean, I say it. You can definitely do both. Work a 9 to 5, build a business. You don't have to take the leap. Like you said, you love your job, so you're
right,
like,
right,
you might die. And I know people like that. They're like, I'm an accountant, I'm a lawyer, I'm a this. I don't have an age where I have to stop doing
right,
this.
right, right,
So they're just gonna do it until they don't want to do it anymore. I think that's freedom.
right, right, right. Yeah, but freedom for me is just if you fuck with me, I have the ability to say screw you and walk out. That's long as I got that peace of mind, I'm free.
Right.
That's the only peace of mind I need. I don't need to not be there and get all this income from. Long as I actually don't need you to survive, you can get on my nerves if you want to. Watch what happens. I leave all these cases here and walk out. So last question, because we going long. So this is the last question, and this is always I think an interesting subject. So, well, I guess I'll preface this by saying, well, no, let me just give the question first. Okay, this is not really overrated or underrated. I just want your opinion on it.
Okay.
I see a lot of YouTubers, people on social media who tracking their debt-free journey, their first generation millionaire, their entrepreneurship journey, and a lot of married couples and they do things separately. They do their whole personal finances separately. Now, me and you never even spoke about this before, so I don't know your take or what y'all do. What is your position on household finances as a couple? Do you think that it depends on the couple? Do you think that it depends on the couple? But what are your thoughts on that? Let me know. Go ahead.
I think it depends on the couple, but I am team joint bank account and transparency if you have private bank accounts. So
Right,
my husband and I'm like you, he lets me do 97% of the investing, but he has 100% visibility on what we're invested in. He
right,
knows where our money's going. He can veto something if he doesn't agree with it, but he hasn't pretty much done so in 19, 20 years, right? Um, so it's like pretty good. We're on the same page. But I will say we kind of set that expectation from the beginning. When he proposed, while we were engaged, we looked for financial advisors to work with. We picked someone who could get us on the same page because I was the 16-year-old investor and he was the guy in college who knew to pay his bills so he could have good credit. But other than that, wasn't really too savvy. So we
right, right,
had
right, right,
someone
right,
who got us on the same page. And that third party helped because then I wasn't Miss Know It All and he wasn't Miss Don't Know Anything, Mr. Know Nothing, right? So
right, right.
now we're both educated really well in our spaces, but we allow each other to take the lead in what we do well. But we have a joint bank account for household expenses because we want the mortgage and everything and certain things to come from one place. But if he has his own bank account for like boys trips and
Right, right, right.
stuff like that, and I have my own for stuff that I want to do, like, hey, I want to give him an anniversary gift and I don't want him to know what it is or when
Right,
I
right,
get it,
right.
so I'm going to use my account to cover it. So that kind of works for us, and I think it can work for a lot of couples too, but I've also seen where couples are team separate bank accounts
Mhm.
because they're not the same as far as financially savvy. And if you're with a partner who can't balance a checkbook and you got NSF fees all the time because they're overspending because they think you can swipe, and you're like the one putting in money and you never get to eat, that's definitely a
Right, right,
problem. And
right.
so I've seen couples who've had to separate until both people can get on the same page financially. And even then, they may be cautious about sharing accounts because the other person's not as disciplined. So I think it depends on the couple.
Right, right. Okay, that's a fair answer. I personally don't think that it. I agree. Everything depends on the couple. You should be an attorney because all your answers are really.
I
I'm
thought
like,
about it.
you
That
just
was my first career choice, but I chose a slightly different path that didn't require law school.
right, right. And so but with that, I agree. Everything is different because I mean, like, yeah, like if someone said, "Man, I love my wife, but she got gambling problem," I'd be like, "Man, you need to hide all your shit." Get her into an inpatient gambling treatment thing, and when she complete that, like, then put her on financial probation for 4 months. I'm gonna have all this craziness. So I understand everybody's situation is different, but I'm a firm believer of I think that you'll make more progress when you do the hey, we're just gonna combine it and have the transparency. Me and my
Mhm.
wife took our engaged, and as uh, a pastor DFD would like to say, my mom's, we were shacking up, and we took those same shacking up tendencies and just brought them over into the marriage, and then we did that for years because we were just used to it. Like, okay,
Mhm.
I just know you whatever. I got the the rent and everything else, and you just buy the groceries and don't ask me for nothing, and then we good. and so and that worked for a while until we just had this epiphany and was like, let's do it together. And I'll tell you, since we started doing it together, we've made more progress financially than we would have made. And it wasn't just a salary increase, but it wasn't just a salary increase. When we talk about percentages, because I like to look at percentages, because that's when you get a real, you can't say, oh, we're saving way more money now, but you're making more money. But when we look at a percentage of what we're investing and saving
Mhm.
in comparison to percentages back then, we are just killing it. And it's all because of transparency. And of course, like you said, hey, she has her account for her stuff. And me personally, once this money go to your account, I don't give a damn what you do with it. If you want to go see a night heat strip with your girlfriends, have at it. I don't give a damn. Like, it won't bother me at all. But I definitely think that that's the best way to do it. I will tell you though, I'm so grateful. Like, God, I couldn't imagine being my age and like having to deal with trying to learn somebody and ask them about their finances. Because I already know me, I'd just be terrible. I'm like, what? Your credit score? What? Nah, this date over. Here, because it's a real serious thing, and you know, like you said, y'all had some financial understanding on the front end. Me and my wife was like, I love you too. Let's do this. Then we was like, damn, I said both fucked up. So luckily, I wouldn't advise nobody to do it that way. But like I said, luckily, we both were reasonable, rational adults, so
Yeah.
we were able to massage it and figure it out. But that story doesn't always end like that. So I definitely think I agree with you. It depends, but like, hey, if you out there in the game and you looking, God bless you. I'm a pray for you because it's a
Yeah,
cold,
no.
cold world out here.
No, I tell my friends all the time, I'm so grateful I am not on the dating scene. I don't think I would have survived online dating or even the pandemic. I'm like, it's just too much.
I did a
Eh,
search once because a friend of mine told me about a guy she was seeing, and after like maybe a month, he asked to borrow money, and I was like, guys are asking to borrow money. And it was something crazy like getting this car fixed. And so I Googled it. No, I YouTubed it. I was like, are guys asking girls to borrow money? And I went down this rabbit hole of, I don't know if they were called like a red pill podcast or what, but there's a whole set of women loaning guys money and never getting it back, and guys borrowing it and never having any intent to return it. I was like, this is crazy.
I actually did a IG reel on that once because there was this article where this girl went to Reddit and she said, "Am I wrong for not wanting to loan my boyfriend money?" And the funny thing is, everybody was like, hell no, those are red flags. But the funny thing is, the story he told her was that he needed to borrow money from her so that he could buy a video game for his son. And her immediate reaction was, why would you borrow money to buy a game? That doesn't make any sense. You can't afford the game. Like, you should just tell your son you can't get it. And he got really upset with her, right? And he's cursing with her, and you so selfish, and I used to pay for all our dates. So he like brought all the stuff out, right?
Right.
Come to find out. So anyway, she got mad with him. He wanted access to her bank account so he could just take the money himself. And she was like, hell nah, right?
Right.
So then it became a you don't trust me and all these things, right? Again, getting emotionally high level. And she's like, what's wrong with you? So she takes a pause, walks away, comes to see him later, and finds out that the money's not even for the son, because she asked the son, like, do you really need this video game right now? Your dad's really stressing about getting it for you. Son is like, I don't know what you're talking about. So then she found out like the dude was borrowing the money from her to pay for someone else's car to get fixed, allegedly one of his guy friends, but whatever. Like, you borrowing money from your girlfriend and you lying about it, that's a double no for me. Right. And so she, of course, didn't give him the money and they broke up. But the point was, he got mad with her. He wanted access to her bank account, and he lied. And I was like, nah.
See, there's this concept. There's a video I have, and it may be a video I released behind the paywall because there's a little bit of me unfiltered. But I tell you, it's called signs you might be a financial fuckboy, okay? and so now when I say it, that's because it just flows, and I really can't speak towards women. But I'm sure the same thing may or may not be applicable to women. I'm sure there are women who are terrible, and I don't know what you would call them, but financial fuckboy is a clear thing. And there's a few red flags, and being able to afford any fucking video game is a big ass red flag, and I need to put that on the list of financial fuckboyery. But it's like simple things like, if you're a grown ass man and you're worried about how you're going to get to and from work, that means you need to do something different. And I thought of that because somebody I know who I grew up with, I was really good friends with, they moved, and I haven't seen them in probably years. I maybe seen them maybe once when I was in law school or something like that because he was in the area. But I haven't maybe seen this person 2 or 3 times in the last 15 years. And I wake up one morning randomly, and like, if you call me through social media, I hope you're not dying because I'm probably not going to answer. I don't care if it's my mom. I'm like, what the fuck's she calling me through Facebook for? Right. So I see this person calling me, and I'm like, they wilding. I'll answer it. I go to my messages. I don't know if it was Facebook or IG or something, and it was like, "Yo, can you loan me $20? I had the money to get to work, but I forgot Netflix was taking the money out. Now I don't got it." So my reply was really bad. I was like, "Sound to me like you don't need Netflix." But like stuff like that, you gotta think. I'm in my 40s, okay. If someone grew up with me, you an old ass dude, okay? so I was like, but it's certain things that once you reach the age of, 25, should just be non-issues. Like asking for money for a video game is the equivalent to me of your kid can't go on a fucking $20 field trip because you don't got the money. You need to be kicked in your ass. That's financial fuckboyery, okay? Yeah, so that was crazy. Yeah, she was smart. And you borrow money to get your homeboy car fixed.
Yes.
That's a
Or
whole different.
attempted. She did not give in, but yes, he
Yeah,
thought it
that's
would
not. She
work.
need to run. I hope she probably still with that guy, but she shouldn't be.
Nah, she ran. She ran. She was
Yeah,
like, mm-mm.
that's crazy. Yeah, well, hey sis, I appreciate you coming on the show. This was very dope. We got to do it again. Before we dive out, hey, make sure you give everybody your social media content, all your social handles. That's your social security number, so they can know where to find you. I got your IG and your website in the description. I put all the information you give in the description, but just go ahead and drop it so everybody can have it.
Absolutely. Check out thepurposeofmoney.com if you want to see my blog, my podcast, and my new course, The Purpose of Money Maximizer. And check out Instagram at The Purpose of Money, Twitter at Purpose_money. And I'm on Facebook too, but I'm always on IG. So check me out, hit me up in the DMs, and join me live most
Yeah.
Tuesdays.
You gotta get on TikTok. You're not on TikTok
I'm on
yet?
TikTok, yes, at The Purpose of Money as
Okay, all right.
well.
I gotta look you up. Yeah,
Yes,
TikTok
look me
easy.
up, and but I think I'm actually following you.
Okay, all right. I
So
gotta make sure I'm
so
following you
follow
there.
back. But yeah, no,
Okay,
I love TikTok, but that's my newest platform, so it doesn't have as many videos or engagement, but I'm there.
cool, outstanding. Hey, as always, hey, I appreciate y'all tuning in. Y'all have a great weekend. Take care. Be blessed. Peace.
Bye.